Take a look at these options for the ticker MSTX. So MSTX is a MSTR derivative, which is pretty much like a Bitcoin holding company. And the last video I made, I told you how we can use the Bitcoin volatility to trade MSTX options, which are priced pretty cheap. As you can see, they go up to like, 75 cents, 60 cents, 45 cents. So in this video, I want to show you exactly how to go about trading options, and I'm going to show you all the risk associated with trading options. So just a quick disclaimer, options are highly risky, which you will get a sense of as we progress in the video. But I'm going to show you how to take advantage of this Bitcoin volatility to potentially make some money trading options. So please watch this video to the very end, and please do me a favor, give this video a like. Let's try to get this video to 100 likes. This is the Bitcoin chart on a 45-minute scale. The first thing we have to determine is what price do we think Bitcoin will end at the end of this week. So let's go back to the daily chart. On the daily chart, we draw a line right here, Friday, October 17th. So we're going to do some really risky options trade. These are all expiring this Friday. Very risky. They're also the cheapest options because they expire a lot sooner than options like for next week or the week after. So whatever our Bitcoin price target is, it has to hit that price target by this date. So let's go back to the 45-minute chart. And on the 45-minute chart, so okay, my thesis right now, a very conservative thesis. So we'll do a few different ones. So a super conservative thesis is that, okay, Bitcoin price will go above this 200-day moving average on the 45-minute chart. So around $118,000. So Bitcoin will trade above $118,000. So that's the super conservative thesis. And the most risky hypothesis would be that Bitcoin will trade above, let's say, $122,000 by the end of this week. So conservative, like right here, like 118, and risky 122. So those are the two trades we're going to investigate more to see like what are some profitable options that we can buy. So from here, the reason we drew these two lines is because we're trying to determine what the percentage we're looking at. So a super conservative bet would be that Bitcoin is going to go up at least 2% from where it is currently right now by Friday of this week. And a risky trade would be that it's going to go above at least 6% by this Friday this week. And so it's risky because the way options work, like we're going to go dig into a little bit more, but the way options work, like if it doesn't go above the 118 by Friday, then we lose 100% of our money. And not on Bitcoin specifically, but on the Bitcoin derivative like MSTX, which I'm going to go into in a second. But I think Bitcoin is on an uptrend right now because look, it's clearly recovering from its big dump. We got a buy signal on the 45-minute chart. So we're expecting the price to like go, keep going up. But again, there's no 100% guarantee. The Bitcoin price could as easy just go back down or trade sideways, in which case we lose 100% of our money on Friday. That's why options are risky. It's not like buying the stock where you can just lay low, and if it doesn't hit your price target, whatever, it'll maybe hit it next week, it'll go up next week, or you can exit at like a small 2% loss. Options don't work like that. So from here, we determine two price targets, 2% and 6%. Let's keep it simple. So MSTR is a direct Bitcoin derivative. As Bitcoin price moves, MSTR moves accordingly, like pretty much the same exact percentage, sometimes a little bit more. Sometimes there's a difference within like a percentage, give or take. So like say, if Bitcoin moves up 2%, then MSTR will move up 2%. So around like $320. And if Bitcoin moves up 6%, MSTR will move up 6%, like say right here to around $331, which actually does come up against this 200-day moving average. So that's an interesting coincidence, but you see that often in charts. So those are the two levels we're looking for. So again, we could buy the MSTR options, but if you watch this video that I made, I go into more detail. MSTR options are actually way more expensive. So it just makes sense to like, if we're going to play this options game, it just makes sense to trade MSTX. And quickly, what MSTX is, so now we're looking at the MSTX chart. MSTX trades exactly as MSTR trades, but 2x. So for example, you see, just a quick example, from here to here, MSTR moved up like 22%, and MSTX moved up about 44%. So it's exactly 2x leverage of MSTR. So from here, what we're trying to determine. So this is where we're going to try to determine exactly what options to potentially buy. So for 2%, it would be 4% on MSTX, and for 6%, it would be 12% on MSTX. So let's get those levels. So from here, a conservative play would be like 4% right here, and a risky trade would be around 12%, right around here. And let's draw some lines so it's easier to see. So like $20, and then say like around $22, and then we can get rid of these. So now we have our levels determined, and then let's draw the expiration. So we have until October 17th, which is a Friday, for the price to trade up to those levels. So again, now we're going to take a look at the options and see which ones would make the most sense. But again, you see how we determine. So a lot of people, when they buy options, they think, okay, they're just going to go straight gamble because it looks so cheap. Like, so for example, you see like some of these options trading for like $24 or $25 for like 0.05. So when you go to actually buy it, what the broker is going to charge you is 0.05 times 100 for one contract. So that only comes out to like $5 for one contract at a 24 price target, which is like super cheap. It's like, it's like a lottery ticket. And that's how a lot of people usually play it, like a straight up gamble, where, if they could buy like 50, so they could buy like 10 of these contracts at $24 for like $50. And if the stock goes up to like $25, that 0.05, that $50 would multiply by like 20x at least, and like yield them like $1,000 profit. So that's like a straight up gamble. But like what we're doing here is we're actually making a measured, like a super educated guess on what options to buy based on one hypothesis that the Bitcoin price will go up. So our conservative bet is that by October 17th, the price will be above $20. And the risky bet is that by October 17th, the price will be above $22. And we determine this by looking at how high the Bitcoin price can possibly end at by the end of this week. So for the $20 strike price, it will cost you around 75 cents. But remember, that's when you go to actually buy it, it's going to be $75 for one contract. So we come back to our chart. So what that actually means for us to break even, it has to go above $20.75. So let's draw another line. Let's make this a different color so we can distinguish, and let's make this 2075. Okay. So this is our super duper duper conservative bet that if we buy this $20 strike price, $20 option, where the price has to go above 2075 for us to make any profit whatsoever. But even if it just goes above $20, we're not going to lose 100% of our money, but we are going to lose money, but we are going to lose money. So it has to go above 2075 for us to break even. And then the super risky bet, which is the $22 strike price, is trading at 25 cents. So when you go to actually buy it, it'll cost you $25 for one contract. And for that, for us to be profitable for the $22 strike price, it has to be above 22.25. So let's make that 22.25 right here. So if we buy the $22 contracts, the price has to be above 22.25 for us to be profitable. This is what you have to determine. As you can see, like although the 2075, it looks more expensive because you're paying $75 compared to like $25. If we take the measurement here, the price has to go above like 6% by the end of the week for us to be profitable. For the $22 strike price, the price has to be above a good 13.5% for us to be profitable. So that's what we have to like consider. And that's kind of like what I want to explain to you, like how to trade options, even when it looks like really cheap and you want to buy like some of these cheap options, you have to consider like, do you think the price will trade? Do you think the price will go above these strike prices? If you had the $22 strike price and yeah, the stock price is going up and up and up, but on Friday, it's like trading at 21.71. Even though it's like a few percentage away from your strike price, your options are going to be worth zero. You're not going to be able to even get out of your options. Maybe at like a penny, you'll be able to get out, but it's going to be effectively worthless. So that's what makes options so risky. And if you're like, say, slightly above 22, then you can like exit at like somewhere between 0.05 and 0.25, like somewhere between 0.05 and like say 0.15. So like you're not losing 100% of your money, but you'll still be at a loss. It has to be clearly above this 22.25 for you to like make any type of profit. And I know options can get really complicated. It actually took me like a good like 2-3 years for me to finally figure out how to trade options profitably. Like before, when I just first came across it, I would just like try to buy the cheapest one and just hope and pray. But like this is a much better strategy. And if you want more in-depth explanation, some like one-on-one session, you can go to the website dnchartmastery.com. The link will be in the description, and you can book a 15, 30, or 45-minute call with me, and I can walk you through. Like you can ask me questions. Like when you ask me questions, that gives me a better idea of like where you are when it comes to like understanding like how to trade options, and I can answer questions that will help you personally understand exactly what to do. And this is just one strategy, like buying options. This would be under the strategy of buying options and selling it at a profit. There's also another strategy that's statistically makes you more money, like 80% more likely to make money, which is selling options. So, for everyone that's like buying 60 cent, so everyone that's paying $75 to buy one contract, there's someone else on the other end that's selling that contract. And statistically, they're more likely to make money, and they're getting a premium for selling that contract. And statistically, they are more likely to make money, be profitable than someone buying options, because time is working in their favor. Whereas when you're buying options, time is working against you. As time goes on, your options become less and less valuable. But so that's a different technique that's called selling options. And I can also teach you that on a one-on-one session if you want to learn more about selling options, or if there's a lot of demand. Like if I get a lot of comments, like say like over 50 comments, people saying make a video on selling options or something like selling options video, then I'll make some videos on selling options, because that's actually a great strategy to like generate some income like week over week, like 1%, 0.5%, which adds up over time. So selling options is a great strategy. And if there's enough demand in the comment section, I'll make those type of videos too. So I want to bring you this video on how to potentially take advantage of this Bitcoin volatility. And if you have a good idea, again, if you think that Bitcoin price is going to go up this week, and I'm showing you exactly how to potentially take advantage of it using MSTX call options. So please let me know what you think about this video in the comment section. Please give this video a like. Make sure you're subscribed to this channel, turn on your post notification, and I will see you on the next video. Thank you for watching.